Hey guys, Chris Dunn back with you. A few days ago, I got a question asking, can you walk me through the nuts and bolts of your cash reserve strategy? For instance, are you leaving money on various exchanges, banks, apps, etc.? I'm trying to understand the best way to take advantage of major moves and not get stuck with cash stored in the wrong place. And since a lot of you guys seem to have similar questions around cash reserves, I wanted to do a video talking about how much of my portfolio I keep in cash and really the strategy around cash. Last year, I created a video called The 12 Investments in My Multi-Million-Dollar Investment Portfolio. And I basically did a 30,000-foot overview of what I call my investing machine and showed the different asset classes that I invest in. And I'll link that up in the description if you haven't seen it yet. Now, while the amount of cash that you should keep in your portfolio is different for everybody, I'll give you a framework that can kind of help you decide where to start and show you how much cash I like to keep in my portfolio. I'll also talk about the three main capital buckets that I have for cash, and we'll look at the 6 asset classes that can serve as cash. So let's start by answering the question, why should you even have cash in your portfolio at all? After all, we should probably think about what billionaire investor Ray Dalio says about cash.
Cash is trash.
Now, cash is obviously something that people want to have easily accessible, but is it smart to keep all or even most of your net worth in cash?
Dude, what are you doing?
And the way I like to think about this is I have 3 main capital buckets for cash. I have personal cash, business cash, and investment cash. And each bucket has different goals and cash requirements. And in this specific video, I'm going to focus more on personal and investment cash because business cash requirements vary massively depending on the type of business that you're in. Also, when most people think of cash, they're mostly thinking of dollars or whatever fiat currency their local government uses. But there's actually 6 main types of cash-like assets. The first is your home fiat currency, right? For me, it's US dollars. You also have other Forex currencies like euro, yen, whatever. You also have gold, Bitcoin, treasury bills, and the newest one is stable coins. And each one of these cash-like assets have their own sets of pros and cons that I'll cover in another video. But for the sake of this video, we're gonna look primarily at your local fiat currency as the main form of cash, since it's probably the most widely accepted form of money and easiest to invest in the stock market. Now, the most important thing to know about fiat money is that inflation eats about 2% to 4% a year of that cash's purchasing power. So imagine that you have all of your cash sitting on a table, and every year you have to light 2 to 4% of that on fire. So basically every year your dollars are able to buy a little less than the prior year. So that's why it's important to be invested in other assets and not just have your net worth sitting in cash. So let's start by talking about your personal cash. Now, the main purpose of your personal cash is to support your lifestyle, right? It's how you eat, how you sleep, how you travel, how you buy gifts, enjoy hobbies. And if you're like me, you probably spend way too much money on traveling. But the way I like to think about personal cash is I want to keep about 3 years of living expenses that I put in what I call my FU account, so I never have to make fear-based decisions or compromise my integrity to make money. I can always walk away. It's money that I have set aside, so I can always walk away if I don't like the work I'm doing. So I take my monthly burn rate, which is about $12,000 a month, times 36 months, which is around $432,000, and I just round that up to about $500,000. Now, I don't live a super frugal lifestyle, but I'm also not into irresponsibly just blowing a bunch of money. Unless it's on my boat and wake surfing, because everybody knows that a boat is by far the best investment you could ever make. I'm on a boat! I'm on a boat! But seriously, if I'm gonna make a big purchase like a house or a boat or a car, I'll usually take a distribution from one of my business accounts that typically holds a lot more cash. That way I can keep that $500,000 buffer in the personal checking. And the reason I don't really want to keep more than $500,000 in my personal cash accounts is because I'm going to lose about $15,000 a year to inflation on that money. And I want to put all of my additional capital into productive use so it can hopefully earn more than inflation. And so I look at that 15K a year as kind of the cost of liquidity or optionality. And that leads us to the investment category, which is way more exciting. So if personal cash is meant for living expenses and indulgences, then investment cash is money that I can use to make more money. And if we look at our investment portfolio as a pie chart, it probably makes sense to have a portion of that pie sitting in cash, so we're able to quickly pull the trigger on an opportunity when the timing's right. It's kind of like having an eager athlete sitting on the sidelines waiting for the coach to put him in the game.
I'm ready to go in, coach. Just give me a chance. I know there's a lot riding on it, but it's all psychological.
And if your capital is always 100% invested, then you're not going to be able to invest in new opportunities unless you pull cash from either your personal or your business accounts. Now, let's talk about the percentages of cash in the investment portfolio. It really varies anywhere in between 50% of my portfolio sitting in cash at any given time on down to about 5% in cash. Now, I'm hardly ever fully invested, and I get antsy when I'm up to about 50% sitting in cash. And I'll tell you the secret. The secret for me is to have a higher percentage in cash when the markets are selling off or there's a lot of fear in the markets. That way I can hunt for buying opportunities. And I want to be invested at a higher level when the markets are trending or in a bull market. So there really is an ebb and flow to the amount of cash that's in my investment portfolios. But my comfort zone is, again, somewhere in between that 5% to 50% level. And that level is totally dependent on what's happening in the markets. Now, what about a strategy for storing the cash and the logistics of moving it around? Now, there's really three main places that I keep cash. For personal cash, I like to keep it in high yield checking accounts, which is kind of a joke today because interest rates are basically zero. And I like to diversify between a few banks. That way I can keep the balances below the 250K FDIC limit. So if a bank does end up going bust, in theory, there should be some protection there. Now for investment cash, I keep that spread out between different stock brokerage accounts, different crypto accounts. And the way that I do this for crypto trading is I'm not a fan of leaving a ton of money on exchanges. You know, exchanges get hacked. Some of them do exit scams. And so I like to keep the most control over my money as possible. So I have a separate checking account that's linked to a few different crypto exchanges where I can wire money in and out. And I also like using stable coins to move tokens that represent USD between hardware wallets and exchanges. It's just a lot faster and more efficient. Now, there are some risks to stablecoins, which we'll talk about in a future video, but again, they can be a more efficient way to move money around. Also, in a future video, we'll talk about the different forms of money and why I don't keep all of my cash in US dollars. And today, I just wanted to kick it back and ask you, what percentage of your portfolio do you keep in cash and why? And are there any other strategies that you'd like to share with the community? Just leave a comment below. So I hope this video added some insight into how you can use cash in both your personal and investment accounts. And everybody has different goals, so make sure to work with a financial planner who can help you figure out the best approach for your own situation. So if you got value from this video, go ahead and give it a thumbs up, share it with anybody that you think would get value. Make sure you're subscribed to the channel, and I'll see you in the next video. Take care.